And the dollar is the big daddy of all liquidity measures because everybody's in debt dollars. And I said this from the beginning is like China needs a weaker dollar. They will agree tariffs in the end, whatever the negotiation is.
It does seem like this is a growth shock that will be met with a requisite amount of stimulus, and that typically is very, very bullish for risk assets. And what's interesting is that Bitcoin, is 3 times the vol of the S&P, maybe about 2 times Nasdaq or 2.5 times Nasdaq. The price action over the last week and a half, maybe even longer, has been surprising given the moves that we've seen in other risk assets. So, of course, if things crater, if something else happens, if there is a geopolitical blow-up, or if there is other things which we can't foresee, then all bets are off. But that just accelerates, again, the response that will be required from central banks.
The global financial markets are experiencing significant volatility, with major stock indices facing sharp declines. Recently, the Dow Jones Industrial Average recorded its largest drop since 2020, plummeting by 1,679 points. This downturn is largely due to investor concerns about the rising inflation and the potential for an economic slowdown, both of which are being fueled by the newly imposed tariffs. The anticipation of price increases due to higher import costs has led consumers to rush to purchase goods before the tariffs take effect. For example, New York City stores have reported a surge in sales of electronics, appliances, and automobiles, reflecting a widespread rush to secure products before prices escalate. Despite the immediate market challenges, some experts believe the long-term effects of these tariffs could potentially lead to a resurgence in certain financial markets, particularly in cryptocurrencies. RaoulPal and JamieCoutts, both prominent analysts in the crypto space, have shared their insights on the situation. They acknowledge the short-term negative impacts of the tariffs, but they also believe the broader macroeconomic forces at play may ultimately favor a recovery. According to Powell, the current market turbulence is a result of President Trump's protectionist policies, including tariffs and fiscal spending, which have contributed to significant economic uncertainty. Powell argues that this uncertainty is driving demand for defensive assets like gold and cryptocurrencies, as investors seek alternative stores of value amid the turmoil. Looking ahead, Powell and Coutts believe that a weaker US dollar could be beneficial for cryptocurrencies. As the dollar weakens, assets like Bitcoin, which are seen as digital gold, become more attractive to investors seeking protection from inflation and currency devaluation. Powell specifically points out that a declining dollar makes Bitcoin and other scarce digital assets more valuable in comparison to fiat currencies, which can be printed without limit. Moreover, a weaker dollar is expected to coincide with an increase in global liquidity. As the Federal Reserve is likely to cut interest rates or implement other monetary easing measures to support the economy, liquidity will rise, which historically tends to drive capital into riskier assets, including cryptocurrencies. This could set the stage for a strong recovery in the crypto market, similar to previous periods when liquidity expansion fueled surges in digital asset prices. We present the clips from interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
So, Jamie, how I'm thinking about what's going on now is I know the talk is tariffs. I know it's all about what's happening today, what happened yesterday, what did Trump announce? But I go back to the framework that I've been using, which is liquidity. And the liquidity has led this whole price action by 3 months so perfectly. It's been sort of insane. And, I'm just, Peter, I'm just going to share a chart. This is from Global Macro Investor, just to kick us off on how I'm looking at this. Now, this doesn't have today's price action, but again, price action in Bitcoin is actually not that bad today, not like the Nasdaq's getting nuked. And I'll talk about the Nasdaq in a sec as well. So global M2 versus Bitcoin, either a 10-week lead or a 12-week lead, doesn't really matter. But basically, should be the bottoming zone. What is happening here is there's a reaction to the Trump headlines, yes, of course, but a lot of this was baked in the cake because of liquidity tightening by the rising dollar and rising rates last year. Now, you can see from the black line, which is forward-looking, 10 weeks, and this doesn't take into account the current move in the dollar and rates and oil, is actually financial conditions are easing really, really fast. The Nasdaq is all the same as well. You can see from the chart here, we're kind of in the bottoming zone. Forward, we've got global M2, and the financial conditions index is screaming higher, whilst the economic surprises index of how the economic activity is versus expectation should start raising too. So the growth shock has largely been put in the price. I think I've got somewhere here some of the charts of the growth shock itself. I'm just trying to flick through. So yes, that's the financial conditions index. Bitcoin, 3-month percentage rate of change, has actually priced in all of the tightening of financial conditions and should very soon start pricing in the other side, which is this financial conditions easing. Now, this will be much higher again because of the last few days. So for me, it's kind of expected. The last time you came on, Jamie, was pretty much at the tail end of a panic back in September last year. At the end of that god-awful range, nobody believed we'd ever get out of it. You came on and said, I think we're all going to be fine. I was of the same, and it all figured out. So lay it on me. Where are you in this?
Yeah, well, I mean, we both have our own hypothesis about what drives markets, and then we build frameworks around it. And obviously, your framework has informed a lot of what I do and how I think as well. But I created my specific macro framework based on the inputs that I saw and backtesting. And you build these, personally, I build these frameworks because I'm trying to eliminate a lot of the subjective bias that creeps in when you're investing to try and reduce errors. And my models are also saying that financial conditions as of starting in February and then accelerating into March, mid-March, all started to pick up and gave me the signal that Bitcoin should do very well over the next, over the foreseeable future, 3 months, 6 months, 12 months.
Yeah.
I couldn't predict what the Trump administration was going to do with tariffs, especially that formula that they've applied. I think that has caught everyone by surprise, even those that expected Trump to perhaps surprise on the upside. And so even with that, you now get so much more pressure on the Federal Reserve to act. And with that, we know typically asset prices respond quickly. And so it does seem like this is a growth shock that will be met with a requisite amount of stimulus. And that typically is very, very bullish for risk assets. And what's interesting is that Bitcoin, is 3 times the vol of the S&P, maybe about 2 times NASDAQ or 2.5 times NASDAQ. The price action over the last week and a half, maybe even longer, has been surprising given the moves that we've seen in other risk assets.
Powell and Coutts suggest that while the tariffs may cause short-term disruptions, the underlying macroeconomic forces are still likely to favor the growth of cryptocurrencies in the longer term. If inflation continues to rise and economic growth slows due to trade disruptions, the Federal Reserve may be compelled to ease monetary policy sooner rather than later. Such actions could reignite Bitcoin's bullish trajectory, as it has in past cycles when a weakening dollar coincided with a surge in crypto prices. Powell and Coutts have both pointed to past instances, such as in 2020 when massive government stimulus led to a rally in crypto prices, as evidence that Bitcoin tends to perform well when liquidity expands. RaoulPal further emphasizes the role of liquidity in shaping financial markets. Financial conditions, including interest rates, the strength of the dollar, and commodity prices, have seen significant shifts in recent months. Oil prices have surged, interest rates have risen, and the dollar has experienced a dramatic shift, all contributing to the current volatility. Powell notes that these fluctuations are crucial indicators for understanding where the market is heading, particularly for assets like Bitcoin. He underscores that the US dollar plays a pivotal role in global liquidity, and as the dollar weakens, liquidity increases, typically benefiting risk assets like cryptocurrencies and equities. As such, Powell believes that despite temporary trade disruptions, global economic forces will ultimately align to benefit the broader market, leading to increased liquidity and potential surges in the crypto market. The weaker dollar could serve as a catalyst for growth in the cryptocurrency space, offering a favorable environment for Bitcoin and other digital assets to thrive.
We've seen a massive move in rates. They formed a nice head and shoulders top. Looks like, we should see rates back down at 3.5% in 10 years. And we've seen an enormous move in the dollar as well. It's a gigantic move in the dollar. And the dollar is the big daddy of all liquidity measures because everybody's in debt dollars. And I said this from the beginning is like China needs a weaker dollar. They will agree tariffs in the end, whatever the negotiation is. They'll agree something because they need the weaker dollar because they need to roll their dollar debts. Everybody needs to export goods, and you need a weak dollar to have a stronger global economy. The US needs to export stuff. Everybody wants a weaker dollar, and the weaker dollar is the biggest stimulus you can get. So it kind of is all, for me, it's like it's setting up. And now it's about technicals and on-chain stuff and just trying to nail the timing, because we've both identified it's like next 3 months for sure higher. There'll be consolidations next 6 months, probably next 12 months. That's kind of how it feels, pretty certain. Now the question is whether it's next month higher, which I actually think we probably end up higher within 2 weeks time than we are today, put it that way. I don't know. So how are you thinking about, let's kind of zoom into your framework, I guess, in a bit more detail, because you've probably got a bunch of charts to show and other bits and pieces.
Yeah, I'd say, when I looked at the DXY back a couple of weeks ago and saw that massive move down, which was a 3-day consecutive move of more than 2.5%, which was in fact like a 2.5 standard deviation, 3 standard deviation event. Every single time that had happened in the past, over the next 90 days, Bitcoin was higher and substantially higher. I've actually got a chart around that as well.
Yeah.
So I might just bring that up. But so you can see that on your screen now. So this is just the Bitcoin chart with these large DXY moves that occur over time. And the subchart is just showing you the percentage change. But when you look at what happens over the following 90 days, and there's only been 8 of these in the last sort of 12 years. So sample size is relatively small. So take of that what you will, statistical significance, from a purist standpoint might not be there, but at least we've got over 12 years, 8 occurrences. Every single time Bitcoin is up substantially. And this yellow line here is just the average of all of those 8 instances. Now we can see where we are today. We're right at the bottom. This is the worst performance post that signal of the previous 8 signals that we've seen over the last 12 years, but pretty much in line with what happened in 2015. On average, though, Bitcoin is up 37% 90 days later, and 1 standard deviation move above that is 63%. So that really brings us towards 120, 130,000 if it's just an average move. And if it's something more, then, it's actually probably about 110, 115,000. But if it's a 1 standard deviation move higher,
but new highs.
Yeah, it's new highs. And so that was giving me a lot of, confidence when we started to see that big dollar move 2 or 3 weeks ago. But since then, it's actually depreciated a lot more. So I think that that really does set up for a strong move. Now, the problem that we have just in the short term, Raoul, I think, is around tax loss or tax season in the United States. And if anyone's looking at their crypto portfolio right now and they've bought in the last 6 months, they're on tax losses. So they might actually dampen things down. The other, counterpoint to that is I think FTX reimbursements are starting to flow or will be flowing very soon. So how that gets recycled back into the market will be very, very interesting. I think Bitcoin will catch a bid first with people who get some sort of recovery money from FTX. And so that may offset sort of the tax loss selling that we typically see around this time.
So what other charts do you want to show us, Jamie, before we dig into some stuff? What are you looking at? Your ideas right now.
Sort of my favorite chart is just looking at the global liquidity, the total global liquidity, which is slightly different to yours. But the interesting thing here, if we just look at the last couple of days, is that we are very close to breaking out of a contraction in total global liquidity, which is obviously an aggregation of...
that's a beautiful kind of wedge pattern, right?
In conclusion, although the tariffs and their associated economic effects have caused significant short-term market volatility, the long-term outlook for both the cryptocurrency market and the global economy remains positive. With the potential for rising inflation and a weaker dollar, along with the likelihood of further monetary easing, cryptocurrencies like Bitcoin may see a resurgence. RaoulPal and JamieCoutts both suggest that the combination of expanding liquidity, a weaker dollar, and increased investor demand for alternative stores of value will provide a solid foundation for the next phase of the crypto market's growth. positioning Bitcoin as a key asset in the coming economic landscape. That's it for today. If you find this video informative, don't forget to support and turn on notifications to stay informed about our latest videos. See you in the next video.